They never fixed it. In 2008, the global financial system collapsed. Banks failed, markets hemorrhaged trillions. Panic spread like wildfire, and then central banks stepped in. They flooded the world with money. They slashed interest rates to zero. They promised us recovery, and we believed them. But the fix was temporary. A tourniquet on a severed artery. And now, 17 years later, that tourniquet is soaked through. The bleeding never stopped. In 2026, central banks are preparing their final move. Not to save the economy, to save themselves. And what they're planning will change everything about how money works, who controls it, and whether you'll have any say in what happens to yours. This isn't a prediction. This is a pattern, and the pattern is screaming. 2008, Lehman Brothers collapses on September 15th. Within days, AIG teeters. Washington Mutual fails. Credit markets freeze. The machine stops. The Federal Reserve makes a choice. Print $3.7 trillion through quantitative easing. Buy toxic assets. Drop rates to zero. Inject liquidity like adrenaline into a dying patient. It works. Sort of. Markets recover. Housing stabilizes. But underneath, something fundamental changes. The economy becomes dependent on cheap money. Dependent on continuous intervention to keep the illusion alive. For over a decade, this dependency deepens. Companies borrow not to grow, but to buy back stock. Governments accumulate unthinkable debt. Asset prices inflate far beyond what wages justify. Everything rises on borrowed money. The economy becomes addicted. And like any addict, it needs bigger doses just to feel normal. 2020, a virus shuts down the world. Central banks print more. Not billions. Not the trillions from 2008. The Federal Reserve expands its balance sheet by nearly $5 trillion in 18 months. Global central banks create more money between 2020 and 2021 than in the entire decade after 2008. They call it emergency stimulus. They promise it's temporary. It isn't. Markets hit records. Real estate explodes. Everyone feels wealthier. But it's a mirage built on liquidity. By 2022, inflation returns. Real inflation. The kind that eats paychecks and destroys savings. Food prices surge, energy spikes, housing becomes unaffordable. Central banks panic, they pivot. Interest rates rise faster than at any point in 4 decades. The Fed hikes from 0 to over 5% in less than 2 years. They hope to cool inflation without breaking anything. They fail. March 2023, Silicon Valley Bank collapses. Second largest bank failure in American history. Within days, Signature Bank falls, then First Republic. Credit Suisse, founded in 1856, is forced into merger. Why? Because the medicine from 2008 has become poison. Years of zero rates encourage banks to load up on long-term bonds. When rates rise, bond values collapse. Silicon Valley Bank sits on $15 billion in unrealized losses. When depositors panic and withdraw, the bank sells bonds at massive losses. Insolvent overnight, central banks respond the way they always do. They intervene. Emergency lending. Guaranteed deposits. Flood the system with liquidity. But they can't stop the realization spreading through markets. The tools don't work anymore. Lower rates. Created dependency and inflation. Raise rates. Breaking banks and crushing borrowers. Print more? Already printed so much that currency is losing meaning. Every move creates a new crisis. Every solution becomes the next problem. They're trapped. 2026 isn't random. It's a convergence point. Global debt exceeds $350 trillion. More than 4 times world economic output. Governments can't pay it back. They can barely service the interest. Pension systems are underfunded by trillions. Promises made to retirees cannot be kept. Commercial real estate sits in a death spiral. Empty office buildings. Defaulted mortgages. Regional banks facing insolvency. The losses are hidden, but they're there, waiting, and the bond market. For decades, government bonds were the safest asset on earth. But confidence is fracturing. When the UK tried to pass an unfunded budget in 2022, bond markets revolted. Yields spiked. The Bank of England had to intervene within hours. Central banks see all of this. They understand the next crisis won't be like 2008 or 2020. Those were liquidity problems. The next one will be a solvency crisis, a trust crisis, and you can't print trust. So they're preparing something different. A restructuring of the financial system itself. Their final gamble. First, financial repression. Governments force savers to accept returns below inflation. They cap interest rates on savings. They pressure pension funds to buy government bonds regardless of yield. They trap capital and slowly devalue it. It's systematic theft, legal, and it's already beginning. Second, bail-ins. In 2008, governments bailed out banks with taxpayer money. Now, when banks fail, they convert depositor funds into bank equity. Your deposits become shares in a failing institution. It's already law in the US, EU, UK, and dozens of countries. Most people don't know this. Larger accounts and business accounts aren't protected. In the next crisis, depositors could wake up to find their cash converted into worthless shares. Third, central bank digital currencies. CBDCs. This is the endgame. China launched the digital yuan. The European Central Bank is developing the digital euro. The Fed is researching a digital dollar. Over 130 countries are exploring CBDCs. They sell it as innovation, faster payments, financial inclusion. But that's not the real reason. A CBDC gives central banks total visibility and control. Every transaction runs through them. They can see what you buy, where you spend, how you save. They can set expiration dates on money. They can impose negative interest rates directly. They can restrict purchases. They can freeze accounts instantly. It's programmable money. And the programmer isn't you. Your money exists only as entries in a central bank database. No cash, no alternative. If they decide you have too much, they tax it through negative rates. If they decide you're spending wrong, they block transactions. If they decide you're a risk, they shut you down. This isn't fiction. This is the logical conclusion of the path we're on. Central banks aren't hiding it. They're openly discussing these capabilities in policy papers. But what they're really building is a system where financial freedom no longer exists. Imagine 2026, a major bank fails. Not regional, but globally systemic. Contagion spreads. Depositors rush to withdraw. Governments implement bail-ins. Deposits above insurance limits convert to equity. People lose access overnight. Panic intensifies. Bank runs spread. The financial system teeters. Central banks make their move. They announce emergency measures. Rates drop to 0 or below. Massive liquidity, but there's a condition. To receive support, the financial system must transition to digital currencies. For efficiency, for safety, transition happens fast. Too fast for debate. Within months, CBDCs become primary. Cash is phased out. Every transaction flows through central bank infrastructure. And just like that, the gamble is complete. Central banks control the economy directly. They control your money directly. Financial repression becomes easy. Negative rates with a keystroke. Bail-ins become automatic. Capital controls become perfect. Try to move money abroad, the system blocks it. This is their final gamble, not to fix the economy, but to maintain control over a system that's fundamentally broken. To ensure when it collapses, they decide who pays. And they've decided it's you. None of this requires conspiracy. No evil masterminds. It's just the logical endpoint of decisions already made, systems already built, laws already passed. The infrastructure for total financial control exists right now. The technology is ready. The legal frameworks are in place. All that's missing is the crisis big enough to justify implementation, and that crisis is coming maybe 2026, maybe sooner, maybe later. But it's coming because the system cannot sustain itself. 17 years of kicking the can have brought us to the end of the road. Central banks can't fix the fundamental problems. The debt can't be repaid. The promises can't be kept. So instead of fixing it, they're preparing to control it. To manage the decline, to decide who survives. You think your money is yours. You think you control your savings, your financial future. But what if you don't? What if the system is being transformed into something unrecognizable? What if the next crisis doesn't just take your wealth, it takes your financial freedom entirely? The 2008 fix is dead. They bought us 17 years of artificial stability. But the bill is coming due, and the price won't be measured in market crashes. It will be measured in freedom, in autonomy, in whether you still control the money you work for. Central banks are making their final gamble. They're betting they can redesign money itself before the system breaks. They're betting you won't notice until it's too late. They're betting you'll accept it because chaos seems worse. Maybe they're right. Maybe this is necessary. Or maybe we should ask different questions, like who gave them this power? Like what we're surrendering for stability? Like whether a system requiring this much control is worth saving. The clock is ticking, the pieces are moving. 2026 is closer than you think. The question isn't whether something is coming. It's whether you'll see it before it's already here.